The trading session was a little nasty today with the market dropping just around 1% here this morning down to below the 575 strike. We bounced late in the afternoon back up to this 578 level. You can see as of the close, this was the largest gamma exposure concentration. Most of that is 0 DTE gamma exposure. So a lot of that's going to be rolling off today. And so despite the nastiness of the trading session, we're really still in this zone that we've been discussing here for the last couple of weeks. You're probably getting tired of us, reiterating this in every single YouTube video, but we are in a zone here on the S&P 500 and the SPY between 578 and 585. So this is obviously a very important zone. We dipped just below the bottom of that zone, but technically, we're closing still within that range. Also, as we've been noting, this is the bottom end of our dealer cluster zone down here. And so it wouldn't be surprising to us to see a continuation of this bounce that started this afternoon. This looks to be a potential support zone down here. As you can see, has been support for extended periods of time earlier in October. And so a continuation could bring us right back to this 585 level. As we've been saying, our bias really is to the upside. We need to see a breakout above this 585 strike, and we really need to see more volume coming in up here, between the 590 and 600 strikes. So that's something we're going to be watching for in the coming days. Sean, I know you've been eagle-eyeing the volatility index. Why don't you tell us a little bit about what you've been seeing there?
Yeah, thanks, Anthony. Definitely an interesting day. And before we get to the VIX, I just wanted to point out too, with the S&P, we mentioned this middle Keltner channel, which we got below the whole moving average, which you see right here. That's this kind of a pink purple line. It's debated what color that is. But once we got below that, man, we saw some follow through to the downside, even with that attempted bounce yesterday. And we almost perfectly bounced, I would say, right from this line. And I think the low of the day was around 57.62. So, we were like within a point of where this thing had good odds of bouncing. And this is just technicals, not talking about gamma. But it's nice to see when we have gamma and the technicals kind of match with the indicators that we're using. I update these settings every 2 or 3 years when the character of the market changes, because sometimes we see the actual settings shift, but it still seems to be following my settings pretty well. So anyway, going back to the VIX, we had mentioned the shift that we saw when the VIX kind of shifted down to where the dealer cluster zone was at 15 and the upper target was in the 20 range. The VIX hit 20 today, not quite to 21. It was like 20 and a half, rejected from there. So I put a little bit less faith in the VIX than I do our gamma readings from the broader indices, just because there's so many other factors that play into why the VIX is positioned the way that the options are. But so far, so good. We even saw this volume down at 15, which kind of lends credit to at least the theory of this rejection at 20, meaning that maybe the VIX heads down closer to 15, and this is a spot where the market rebounds.
Yeah, and another factor that I'm watching that is indicating a potential support level here for the markets is this historical gamma exposure that we track. As you can see over the past month, gamma exposure has been oscillating from positive to negative. This is more oscillation than I've seen probably in the last year and a half. Not since 2022 did I see this much oscillation. And so that's typically what we see when we see increased volatility. However, you'll notice that each of these closing gamma exposure readings that are in this kind of negative 2 billion to negative 1.5 billion range usually resulted in some sort of significant bounce back into positive gamma exposure territory. This is our zero line. So up here is positive, down here is negative. And speaking of some interesting levels, IWM coming into our lower dealer cluster zone. This has been an area of support between the 215 and the 220 strike. And if we just go back a little bit further in time, you really get even more of a picture going back into the summer and really through the beginning of the year. This zone here, of course, it broadens out just a little bit as you go further back, but really this 215 to 220 zone is really a zone of contention for IWM. Here we are, though, right in the middle of that zone. I think this is an interesting point for long plays. We've been talking about doing long strategies on small caps going into 2025. These would be leap strategies. That's something we've highlighted in our community Discord multiple times as a possible play, really playing for a breakout above these top levels and into the mid 200s, upper 200s even going into 2025. By the way, if you're interested in joining the conversation, you can check out our community Discord. I'll put a link in the description below. Absolutely free to check out.
Thanks, Anthony. IWM is certainly an interesting one to keep an eye on. The only other thing I wanted to cover today is TLT, which to qualify this, it's not our typical positive gamma or negative gamma that's going in the flow of momentum. This is more of a contrarian play, but you can see we reached an extreme on our GEX intensity scale with TLT's gamma. We're at negative 532 million, and we have this big cluster at 92. And of course, we closed at 92.07. I'm looking at this as a contrarian rebound play. Me personally, if I'm taking this trade, I'm going to use 91 or 90. And as long as we hold that, I'm going to be looking at upside and, looking at the chart, that sort of backs that as well. We're in a strong downtrend, but as long as we hold that 90 area, the upside potential is, up to anywhere from 94 to as high as 98 here. If you zoom out to the weekly Keltners, which I'm not going to do at this moment, but that's why I would use that 90 as a stop, because if we lose 90, it might be headed to 86, which is quite a distance below that.
Yeah, TLT coming into a really interesting level there. Thanks for that, Sean. Next, I would just want to talk about Tesla. Tesla earnings today having a really difficult time over the preceding month or so, trading from the 260 level down to below 220. Earnings, though, came out after the bell today, and Tesla jumping 10% on a profit beat as company apparently benefits from environmental credits. And so Tesla now trading around the 233 level here in after hours. Big jump right into this largest gamma exposure concentration. It's also our upper dealer cluster. This is filling the gap here and right into this kind of resistance level that was previously support before the big drop. Now, we typically shy away from these earnings type plays because we don't have any real edge, either to the upside or the downside, even though we may see gamma exposure concentrations here prior to earnings like we did with Tesla. But it is a bit of a gamble. It could have gone just the other way. If Tesla had reported negative numbers, we could have seen the price go down to the downside. And, gamma exposure is really a reflection of what market participants believe is going to happen, how dealers are positioned against that. And so, that's what we're really playing off of when we're trading and analyzing gamma exposure. Earnings kind of throws a wrench into the mix because it's a little bit of a wild card that doesn't give us an edge when it comes to data analysis. However, in our experience, it does hit about half the time. And so, even with a 50% or less hit rate, I guess some traders are able to capitalize. Those who were piling in here, though, between the 230 and 240 level, are likely seeing some nice payoffs as long as price holds at this level into tomorrow. We're going to let the dust settle. We'll probably take a look here if we can find some footing in this 235 to 240 zone. I want to start watching this gamma exposure here at these upper levels between 250 and 260. If we can get a little consolidation here or pullback around the 235 area, that could offer a decent entry point for a continued upside move off of this good earnings report. Don't forget, if you want access to our gamma exposure dashboard and option flow analytics, check out geeksoffinance.com. I'll put a link in the description below. You can join and become a member. Also, if you want to check out our community Discord, we've got a number of traders in there discussing market analysis and trade ideas every single day. Free to check out. I'll put a link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.